Pendal MidCap Fund. It encompasses stocks from the 51st largest stock on the ASX to the 150th. So currently that is pretty much in a range of about $2 to $12 billion. The role they play in a diversified portfolio is they augment growth and capital appreciation at a reasonable level of yield. I guess most of the best growth stocks sit in the mid-cap universe, and they'll sit across a range of sectors. Most of the best, plus a couple of $1 billion growth stocks, sit in the mid-cap universe. So that's probably the most exciting part of the universe. And then we also get growth in things as diverse as resources for startup companies that are still building projects and ramping up. They also sort of classify as growth stocks in the early stage of their development, and a lot of those sit in the mid-cap universe. Most of the stocks have a fairly high domestic exposure, so the health and shape of the Australian economy is normally the biggest consideration, outside of resources, which are obviously sort of dependent on what their commodity prices are doing. But the largest part of it are domestic stocks. So, whether they're REIT stocks or domestic consumer discretionary stocks or staples, most of them have a fairly high domestic market exposure. And so understanding how they fit into the domestic market, the shape and health of the domestic economy are really big considerations. Pendal, we have a very big, if not the biggest, active Australian equities research and funds management team. We do that very consciously. We want to cover all the opportunities, or at least understand all of the opportunities in the market, and then we've got very dedicated coverage for each analyst that looks at a sector of the market. We value continuity, and to that extent you'll see that the continuity of the team, the tenure of members within the team is high and definitely higher than the average. We definitely think that continuity in coverage, continuity in personnel, and the cultural advantages that brings have stood us in good stead over time, and it's certainly something we engender and endear in terms of the way they do that. I've been here a long time, for 12 years now, and if you compare me to some of the members of the team, I've only been here half as long as they have. In the Pendal MidCap strategy, the opportunity that we're trying to take advantage of is the companies that sit in the ASX 50 to 150 are really in a sweet spot of their development. Here we have companies that are very focused in terms of what they do. They still have very aligned management teams, often are still founder-led. They in aggregate have higher growth than other subcomponents, be that the large cap or the small cap part of the market. And they're also often the subject of corporate activity. So big companies often come to this part of the market to acquire companies, which can be to the benefit, which is often to the benefit of shareholders. And so we try and select through our research process the best companies that populate this subset, and that's across a whole range of sectors on the ASX. The mid-cap component has the benefit of not being overly populated by one or other sector, where we don't have an undue high weighting like you might find in the large cap environment with banks and bulk commodity miners. We have a very good representation of the different sectors of the economy and very investable subcomponents, which allows us to be able to hedge risks. It allows us to find opportunities in a range of different parts of the economy at different times of the economic cycle. And our research team is really well positioned to cover these stocks, and then I package them into a portfolio that is both risk considered and optimized to be able to outperform the broader market and outperform the benchmark of the mid-cap fund. And the process at Pendal, with a big research team, well supported through good systems and infrastructure, allows us to do that on a very consistent basis.